Hey everyone, and welcome back to the channel. Today, we're talking about one of the biggest financial questions you'll ever face. Should you pay off your mortgage? Especially as you approach retirement. Now, the idea of being mortgage-free is a dream for so many of us. It feels amazing, right? It's the ultimate financial goal. No more monthly payments, a huge weight off your shoulders, and maybe even a way to qualify for government aid, like Medicaid. But what if I told you that paying off your mortgage isn't always the best move? It's a tempting idea, but before you drain your savings, let's look at a few things you absolutely need to consider. Your future plans. First, let's think about your future. Do you plan to stay in your current home forever? If you're considering selling your place to downsize or maybe even to rent, then paying off your mortgage right now might be unnecessary. When you sell the house, you can just use the money from the sale to pay off the rest of the loan. What if you're thinking about renting out your home, or even a part of it? That extra income could cover your monthly mortgage payments, allowing you to keep your cash reserves for other things. The retirement account trap. Now, this is a big one. Many people have a lot of money in their retirement accounts, like a 401k or IRA. The thought of using that money to get rid of your mortgage is tempting, but you need to be very careful. There are some serious penalties and taxes involved. If you're under 59 and a half, you'll get hit with a 10% penalty on top of income tax. And even if you're over that age, withdrawing a large lump sum from a traditional account can be a disaster for your taxes. Taking out $100,000 could easily push you from the 12% tax bracket all the way up to 22% or 24%, meaning you'll lose a huge chunk of that money to the IRS. Remember the difference between traditional and Roth accounts. With a Roth, the money you put in has already been taxed, so your withdrawals are tax-free. If you're thinking of a Roth withdrawal, that's one thing, but with a traditional account, you've got to watch out for that tax hit. Low interest rates and other debts. Here's a quick financial tip. Look at your mortgage's interest rate. If you have a super low rate, say 3%, but you can invest your money in something that earns you 5%, it's smarter to keep the mortgage and invest your cash. Your money is working harder for you in the investment than it is sitting in your bank account, waiting to pay off a low-interest loan. Also, don't forget about other debts you might have. If you've got high-interest credit card debt at 10%, you should absolutely prioritize paying that off before you even think about your mortgage. The risk of no emergency fund. And finally, what if paying off your mortgage leaves you with nothing in the bank? Imagine you owe $100,000 and you have exactly $100,000 in savings. If you pay off the loan, you'll be debt-free but broke. This is incredibly risky, especially in retirement when you have a fixed income. A sudden emergency, like an unexpected medical bill, could leave you in a real financial bind. Emotions versus financial reality. So, while the emotional relief of being debt-free is a powerful thing, you have to remember that this decision needs to be a financial one, not just an emotional one. Paying off your mortgage might be the perfect choice for one person and a huge mistake for another. Before you make a move, take a good look at your full financial picture, your savings, your other debts, your interest rates, and your plans for the future. The most important thing is to ensure you have a strong financial foundation and enough cash for whatever life throws at you. Have you ever considered paying off your mortgage early? Let me know in the comments below. And don't forget to like and subscribe for more financial tips. We'll see you in the next video.